Hi, welcome to BloombergQuint. We hope you're having a good weekend afternoon or a Saturday afternoon, and it's about to get better because for the next 60 minutes or so, we're going to talk to you about GST. Now, we're a few days away from a big debate in Parliament on moving the constitutional amendment bill through the Rajya Sabha. That's going to be an important development in the course of GST and its implementation in India, but there are many, many more steps. Now, the reason we're inviting you to join us this afternoon is because we thought this would be a good time to do a quick refresher course on what GST is really all about, how it will replace the plethora of indirect taxes that are currently levied upon various goods and services in this country, what it means in terms of the impact it will have on industries, and all the various opportunities and challenges that come with this big tax reform. We've got many members of the BloombergQuint team here because we're going through this refresher course along with you, so it's going to be an interesting afternoon for us. And as you can see, the only man in a suit in this room is, of course, the tax expert and well-known tax lawyer, Badri Narayanan. He's partner at Lakshmi Kumar and Sridharan. And Badri is going to actually take us through this 60-minute session. So good afternoon, Badri. This is the best Saturday afternoon you're having.
I know, absolutely. With a classroom like this, I'm really looking forward to this one.
Okay, so, a little bit about GST. We're a few days away from a big parliamentary debate. It does seem that finally consensus is building up amongst the various political parties on reaching agreement, on the basic architecture of this new tax. What are you hoping will be the next steps from here on?
So the steps from here on is going to be that we are going to have, hopefully next 2 weeks, have this constitutional amendment bill passed through Rajya Sabha. There are going to be some amendments, I believe, that have been proposed by the Rajya Sabha Select Committee.
Okay.
We'll have to bring it back to the Lok Sabha and have that passed, but that's a formality. It can be done in a day.
Okay.
Because the majority in Rajya Sabha is more than 2/3, so it should not be a problem for them.
In Lok Sabha,
in Lok Sabha,
right.
And then but the thing is, after that, there still needs to be a step of have 50% of the states ratify this amendment bill. So that can take about 2 to 3 months.
Which is the process with all constitutional amendment bills,
all constitutional amendment bill. The only thing is, Jammu and Kashmir has to say yes to this amendment positively.
Okay.
Just because other 50% of states say yes. Jammu and Kashmir is slightly different in our constitution, which is why service tax is not applied in Jammu and Kashmir. Because any amendment which is not accepted by Jammu and Kashmir Parliament is not part of their law, even if it's the constitutional amendment.
Okay.
But we do believe there is consensus on GST in Jammu and Kashmir.
Especially because I would imagine because the BJP is participating in government there.
Not just that, I think they're going to make money out of GST.
It's going to be one of the states that in fact benefits from GST.
So it's one of those states which is going to benefit because they have a net consumption as opposed to net manufacturing and export. And therefore there's going to be more taxes coming in that state, and therefore the state is going to benefit out of this.
Okay, I'm glad you brought that up, net consumption. I think, one of the first few questions to ask you before you actually get onto the whiteboard and explain the structure of GST is, everybody calls this a consumption or destination-based tax. Principally, how is GST, the full form of which is goods and services tax, different from, let's say, customs duty or excise or service tax, the key sort of indirect taxes that get levied in India or anywhere else in the world?
Perfect. So I'll give a little bit of a background about these taxes and then kind of get into why GST is different.
Okay.
And why GST is considered to be one of the more fashionable taxes which every country seems to have. Just to give an example, it took about 200 years for income tax to be levied on a perpetual basis year on year in different countries. Okay, because income tax, very interestingly, was levied and collected on a year basis for funding wars. Okay, so in any year you did not have war, you did not have any income taxes, which is why even today income tax is a per year, every year kind of taxes. And it took 200 years before it became a routine that you suffered even if there is no war.
Okay.
So you suffered even though there is no war because income tax became a year on year levy. But it took 200 years for all the countries to accept and implement income tax. Surprisingly, the first form of GST came only in the 1950s, early 1950s in France.
As recent as that.
And in 60 years, 160 countries have implemented GST. So it's like the Mata Hari of all taxes. It's very, very interesting. This is one of the most fastest applicable taxes which has been taken on. And most countries have implemented, and I'm not saying all countries, most countries have implemented have benefited from GST.
Okay.
So we'll explain
why. Yeah, we'll get to that in a bit.
But before I get to that, and I ask some questions to this August audience.
August. Yes.
So
this sleepy dragged out of their homes on a Saturday morning audience. So
you always need that a bit of a starter, right? A booster. So
I'm sure if you did a poll by hands and asked them how many people think GST is the best way to start their Saturday afternoon, yeah, the results might not be very encouraging for all tax experts like you.
The fact that they are here, that still shows that they are consenting to the fact that this is a very interesting session. Anyway, let's coming back to this.
Okay.
So today, if you see the taxes that we have applied, if you take for example customs.
Okay, so do you want to get onto the whiteboard and then we'll sit down and then we'll ask you questions as you go through this, right?
No problem.
Okay, great. Let's start with that then.
No problem. So I'm going to give a few illustrations and then I will explain how the system works. And I'm going to take a very, very simple supply chain to explain what the current taxes are and what GST means and why GST is different and what is it. Okay. Menaka mentioned taxes like excise, customs, service tax. We leave service tax for time being out. Okay. So I'm going to focus initially on customs, and I'm going to focus on excise. I'm going to focus on sales tax. These are three major taxes. There are some painful taxes like entry tax and octroi. Okay. The leakage in these taxes is higher than what you collect. Okay. So these are all really nuisance taxes, as I call. Okay. But they exist and they can have a real drag effect on the economy. But I'm not going to make this more complicated than is required because the percentage of collections from entry tax is very, very small. We'll focus on the main things. Okay. Excise, customs, sales tax, or I should say excise and customs or entry taxes are called event-based taxes.
Okay.
They are not transaction-based taxes. There's a big difference between the two. What that means is, whenever the event, which is the taxable event with respect to these activities occurs, tax automatically becomes payable. So you don't have to do anything else. The minute you manufacture, you must pay excise duty. Even if, for example, you manufacture, the goods go out of the factory and they burn down, or reach outside the factory and they are not bought, or they are sold free of cost outside the factory. Once this activity of manufacture happens, you are going to impose excise duty and collect it. A person who does not do manufacture does not have to pay excise duty. So, for example, what's a typical supply chain which you have in this very, very basic supply chain? So, I'm going to have a manufacturer, okay, a trader, okay, and you have you and me, the suffering consumers. Okay, so let's manufacturer, trader, consumer, very easy. A manufacturer undertakes the activity of manufacturing. Therefore, he has to pay excise duty on all activities which he is going to undertake, regardless of whether he is going to make a profit, sale, what price. And because manufacturing is based on event, the valuation rules, the provisions are all designed to understand what's the intrinsic value of these goods and try and tax it. It has nothing to do with what the actual transaction is. Okay. Even if I captively consume a manufactured goods, I'm going to have to pay excise duty. Similarly, whenever I have goods imported into India, the act of importation is a taxable event with respect to custom duty, and therefore with respect to this, I will have to pay custom duty regardless of again the fact whether the transaction happens, whether you're going to make money or not. Sales tax is slightly different, we will come back to that. Contrast this with something called a service tax, which is a transaction based tax. What that means is, if the transaction of service happens, the value that you attribute for that transaction of service is what is taxed. Okay. So if there is no consideration for service, then there is no tax at all. Here, even if there is no consideration, you still have to pay excise duty on this. Okay. There is something called VAT, which is applied on the event of sale. So whenever a manufacturer makes a sale to a trader for money consideration, he has to pay something called VAT. So we all see that whenever we go to the restaurant, we have service tax and VAT. It must be quite a fascinating thing to see. So I had a cup of food and a plate of food, and I'm having to pay both service tax as also VAT. It really hurts me, at least whenever I have to see both of them. So I would expect it should either be a service, or the service is so bad and I only want to take the goods, that should only be VAT. But anyway, it's one of those few transactions where both are applied, but we'll leave it at that. So when manufacturer sells to a trader, there is an activity of sale which is happening, and therefore VAT is collected on that. But the interesting thing is, this sales tax is not what is GST's conceptual basis, because this in our Indian regime is an origin based tax. It's not based on consumption. So this VAT is retained by the states, which are actually manufacturing states. It does not get passed on to the chain, and I'll explain why that has an impact on this. So VAT is what you apply. Now let's take a trader. Does a trader manufacture anything? No. So there is no excise duty on this transaction. Right. And this, as you know, is collected by the center, not by the states. So the VAT is collected by the states, custom duty is by the center, excise duty by the center. Therefore, there is no excise duty. Therefore, he does not get any credit of taxes paid to the manufacturer. As you know, the invoice will be, manufacturer will raise an invoice on the trader. It will have excise duty, which he will pay to the central government. He will pay VAT, which will go to the state government. And the combination of these two is what is the price which has to be paid to the trader. Trader, on when he sells to the consumer, has no excise duty to be paid on it. Therefore, this excise duty becomes a cost to him. That becomes part of his cost price. He will again have to pay VAT when he resells to the consumer, but he can take credit of this for the purpose of making the payment. So, for example, if your VAT on this transaction is 110, and if he has paid 100 to the manufacturer, he effectively only has to pay 10 rupees through cash. That's a normal credit system which operates. So this is what, in short, is the difference. So key thing is, these taxes are based on the event of manufacture or import. This tax is based on transaction, but is origin based. Service tax, on the other hand, is truly the predecessor of GST, in that it's a transaction based tax which has also got a destination and a consumption component to it, because ultimately the taxes go to the person who has actually consumed the services, and I'll explain that in a minute. We'll come back to that in a minute. So this is something which is there. Think about it. We have struggled with excise duty and VAT for the last 70 years. Okay, Excise Act came in 1944. Okay, and your CST Act 956. So we've been working through lawyers, chartered accountants, tax consultants, and over the many years we have made our clients suffer on these things. And now, after 50 years of court explaining these concepts, there is a lot more clarity, and there is minimum amount of disputes with respect to it. So, for example, excise duty to a large extent is now stable. Okay. VAT to a large extent is stable. Everybody understands it. Businessman understands it. So, what is this? Is it a bonanza for tax consultant? Is it a bonanza for lawyers? That you want to move from this system, which has now worked for the last 50 years, you have tinkered, and you come to a situation where it's ready to be taken advantage of. Businessmen understand it, they know the risks, they know the opportunities. And then all of a sudden, just like I'm going to do, you rub this entire thing off, and then you start talking about GST as if that's going to solve all the ills of society. Okay. Now, I have a question. Why is GST such an important tax, and why is it that in the last 50-60 years we've had GST being implemented in not less than 160 countries? Okay, there must be something truly great about this tax, correct? Certainly not from the point of view of the taxpayer, but from the tax collector. Must surely be. Okay, I
That's
don't
the
think
only one who ever benefits from a tax. Right?
Absolutely.
The tax collector.
Tax collector should benefit. Okay, he will tell you that you will also benefit, but the tax collector wants to collect more taxes. There are some people who feel that this is really a kind of a combination of both the center and the state coming together to exploit the common man. But we'll leave that aside. Okay, I'm not a.
That's a question we get to ask.
That's correct. So that I'll reserve the answer for that. But what is so great about this GST, that we want to do away with all of this and come up with a system which is called a transaction based tax, which is also considered to be a destination based consumption tax. So please mark these words. So GST is the very, very important thing, multi-point. I'll explain in a minute. Multi-point transaction based destination based consumption tax. All of these are critical to understand what is GST and why it's going to be important. Okay. Before I come to the individual things, the most crucial aspect of a GST system is the fact that it's a consumption based tax. And this one factor is the one factor which has made this tax one of the most successful taxes in the world. I'll ask a question now. I've been threatening to ask a question, but the time has come now, correct? All of us are today in Bombay, correct? There's no doubt about that. Bombay taxes its citizen on sales tax at the rate of 12.5%, assume for example. I hope nobody in this room is from Andaman and Nicobar Islands. No. I'm not going to say it in the wrong sense, but Andaman and Nicobar Islands wants to attract you as day-to-day people in this city. Okay. And Andaman and Nicobar Islands says that I have gone to the center and I have said that in Andaman and Nicobar, whoever manufactures anything, he does not have to pay any excise duty because it's one of the backward areas. We want to make it pristine and nice. We are one of the few places in India which is green, which is vibrant, but we want people to come and enjoy this part of India. Nobody seems to come here except to see the jails and to spend a few days for honeymoon or something like that. So we want people to come and stay here. We are also not going to collect any sales tax. Okay, so no excise duty, no sales tax. Okay, Andaman Nicobar. This mail comes to you from government of Andaman Nicobar to each and everyone in Bombay, including all of you, saying that welcome to Andaman Nicobar. It's a paradise in paradise, no taxes to make your life really and truly joyous. Okay. How many of you immediately mail comes in, write a resignation letter to the MD of this company and say I am moving to Andaman Nicobar Islands? How many will you say so? Ask. How can you say for others?
It's a trick question.
It's not a trick question. It's a real question. How many of you will move? Show of hands. There's complete silence in this room. I said I'll ask only one question.
We're not too smart. We know that there's something with your question.
There is nothing in this question. It's a simple question. I'm a very simple, straightforward fellow. So I don't know trick questions at all. Okay. So
but
tell.
It won't matter if under GST, which is a consumption-based tax, if you move to Andaman Nicobar and don't pay excise or anything else, because if you're consuming in that state, you'll end up paying in the state.
No, but there is no sales tax in that state, effectively speaking.
Okay.
So on the last leg, effectively there is no tax. Therefore, there will be no taxes coming to Andaman
so
Nicobar.
So please, can you tell us why it is that we should not move to Andaman and Nicobar?
No. Why should I say that? It's your
should?
choice. No, I want to know if you had a choice, how many of you would move to Andaman Nicobar once you came to know that there are no taxes in Andaman Nicobar
I
Islands?
don't think that would be the parameter to decide whether or not to go.
Exactly. That's what I want the answer to be.
Say that again so that everybody knows what you
So, what I said was, I don't think that would be the parameter to decide whether or not to go to Andaman.
So as a consumer, this is the point I want to make. As a consumer, you will not shift your residence to the lowest tax state in the country. You are here in Bombay, one because you love this place, you love Bloomberg, you love Menaka and all other things, okay? Or you have social and economic connections with this city. You have your family here, your friends here, you went to school here, you enjoy spending time in this city. So as a consumer, you will never move to a place merely because taxes are zero. But take a situation of a businessman. Will he move to a place where the taxes are zero?
More like
Today, Baddi in Himachal Pradesh has got people moving there. Okay, people are there. People in treacherous places, they have gone and put up factories. Tata Motors is happy to go and put up a factory in West Bengal. It's difficult because there are states where there is no other, because the incentives given are there. So for a tax, a businessman will move to the end of the world to save his taxes, but a consumer never moves for collecting and paying taxes. So if excise duty is a tax on the activity of manufacture, which is imposed on the manufacturer, the businessman, and if he is able to go to a place where he is able to avoid taxes, then the tax collection completely goes away for that state. So, for example, he moves his operations from here to China, then all the taxes of excise which he would have collected is gone away. Similarly, if a businessman moves to a sales tax incentive area, let's say he goes from here to Gujarat or to Northeast where they are giving sales tax incentive, he is more likely than not to put up a manufacturing plant in that area and avoid paying taxes, because for a businessman, social economic reasons are not the criteria. It's only tax and economic reasons that are going to be the key puller. So if you are going to tax the business transaction from a businessman's point of view, he is always going to avoid paying taxes, and you are going to have fluctuating tax collections because he will keep moving to try and find the lowest tax channel. But on the other hand, if the tax system is such that every point you collect, to the extent that it ultimately moves to tax the actual consumption in a country or a place, then since consumers will not move, whether you increase taxes or reduce taxes, the tax collections become stable. And that's the hallmark of GST. The fact that it ultimately taxes in a true sense consumption. Therefore, a person who ultimately stays in a state and consumes goods and services in that state will truly collect, or throughout the channel truly collect the entire taxes, and therefore you are able to have a sustainable, predictable tax base to be able to collect taxes.
Okay, Badri, I have a question. So you have excise, you have customs, you have sales tax, which is VAT, right?
Yes.
And you have service tax.
Yes.
These are the 4 key indirect taxes that get levied in the country right now.
Yes.
They all get collapsed into one GST. Is it multiple GSTs? Because, from everything we read, India is not following the singular GST model. We're following the center state GST model. So we have 2 or 3 GSTs. Are there going to be multiple levels of tax? Can you just give us a very quick overview of that?
I'll give a bit of quick overview of that. See, it's been 50 years, as I said, since GST is implemented in this world, so to say. And periodically, every new country which has added, or at least every major new country which has added GST, has improved upon it. Okay. According to us, countries like Australia and New Zealand have really done a good job of GST, because just like India, Australia has got 6 within the continent, 6 states. Okay, and each of the states used to have something like excise, something like our VAT previously. Right. But the individual states which were collecting these taxes gave up their power to collect the transactions and said, let the center come up with a uniform single GST regime where they collect the taxes from the businessman, and internally there is a sharing of revenue between the states depending on how the consumption has happened. Okay, and therefore what was crucial in Australia was there is a single GST. It works very efficiently. The businessman only has to deal with one authority, and for him the entire market is truly a single uniform market. But in our countries, the states feel the real power of being federal and sovereign is in ability to collect taxes. It is not in being able to do other things, civil things, or being able to have sanitary conditions, phytosanitary health, and no. My power to be able to say that I am truly independent comes from my ability to pay and collect taxes. And therefore they say, whatever happens, I will not give up my power to collect taxes. It's also because in the past, our center has not been able to compensate them for the taxes collected on their behalf. For example, CST is one area where center collected a lot of taxes but did not distribute them on time. Therefore, there is a distrust between the center and the states. Therefore, states say, today I give you all my taxing powers. You center, collect all the taxes, and then decide that center there is one government, in one state there is no government. You decide not to pay any taxes to me, for whatever reason. Ultimately, there is also bureaucracy involved in that. So, between the states, then we'll have to go to Supreme Court and say, please release my money.
So that's why we have a dual GST.
We have
right?
a dual GST which we have implemented.
So it's state, center, and isn't there something called an IGST or an integrated GST?
Yes. So IGST is really an overlap between the central GST and the state GST. Really, we call it as a dual GST because there's going to be a tax which is going to be collected by the center, which will be in the form of CGST and IGST. There's going to be a tax which is going to be collected by the state called the SGST. Now, on any transaction where there is consideration involved, and in some certain unique cases where there is no consideration, but we leave that for the time being. In a transaction where consideration is involved, they are going to impose CGST and SGST where the transaction is wholly within a state. Where a transaction happens between people from one state to another, they are going to impose something called IGST, which is going to be in lieu of CGST plus SGST, but the rate of IGST is going to match approximately the rate of CGST plus SGST. So
Okay. I'm glad you came to rates because I had a question on rates and I think we have some viewers sending in questions as well. So my first question really is if you can run us through what the basic rates currently apply, let's say under VAT or excise or customs. And I know they differ from industry to industry and sometimes based on where you are located as an industry, some of these things might change, but just broad approximations and how that will get collapsed into either a dual GST or a triple GST as you call it. Just a quick question on that and then I've got a couple of questions coming in from viewers, so I'll take that. Yeah.
So very good question. Okay. So today our peak rate of taxes in excise is about 12.5%.
Okay.
Okay. It varies all the way from 0 to 12.5%, but peak rate is really 12.5%. That's what you really see as the rate of tax for excise. Okay. The peak rate for VAT varies between 12.5% to 14.5%. So if you combine the two, you have a rate which is about 12.5 plus 12.5 or 12.5 plus 14.5 between 25% to 27%. So if you are really unlucky and if you are having taxes of both VAT at the highest rate and excise at the highest rate, you are paying about 25% to 27% of taxes today.
Okay.
This is not including, for example, entry taxes and all. I will not get into that further.
What about customs?
Okay. So customs.
Isn't that an additional tax?
So very good question. Okay. So for all of you who have interest in customs or are about to want to understand customs, the bad news is even after GST, customs is going to continue.
It is.
Yes. So custom duties are not likely to be brought in to the net of GST.
And what's the rate, approximate rate
So the
that
rate
customs
again
is applied
goes
on?
from about 12.5% is close to what is there with respect to your excise. Okay. So you have BCD which can vary again from 0 all the way up to 40, 50, 60%.
BCD is basic customs duty.
Yes.
Sorry.
Good question.
Yeah.
So in customs, we have something called the basic custom duty. The basic custom duty, traditionally as you know, is a duty which you impose as a customary fee that you paid to a king when you entered his kingdom. Okay.
Oh, is it?
Yes,
It dates
so
back to that.
That's why the name custom.
Okay.
So it is customary for somebody to come in to bear gifts for the king, and that's the reason why it's called custom duty. So basic custom duty is something which is going to be applied on all import of goods into India, and it is not going to be creditable. And I explain what a creditable means.
And the rate is approximately 12.5.
Let's take 12.5%
Okay.
as the rate. So about 12.5%, 15% is what the rate generally varies for customs. There are some commodities like automobile, if you bring in, goes really high. Similarly, if you bring in alcohol, which some of you will steal as you come through customs, okay, the rate of alcoholic liquor is about 150%. It makes it one of the highest taxes commodity in India across the world also. So alcohol is about 150%, but we leave that aside. 12.5% to 15% is average what you apply.
Okay,
as
so
basic
just if I
custom
can
duty.
follow that up, you said 12.5% is customs. The combined impact of VAT and excise is about 25%. So what is the total tax, let's say, a product pays in this country? Let it be a passenger car or a soap or whatever, anything that you want to take. And if the Arvind Subramaniam committee suggested that we look at a sort of median rate of GST at about 18 or 19%, will that mean that effectively taxes will come down when you collapse all of these indirect taxes into one singular tax, which is GST, even if it's implemented in a center state fashion?
Very good question. So the answer to that is, it's a little more complex than that.
Because actually they don't come down, right?
So effectively, when you say a revenue neutral rate, that effectively means there is no increase or decrease in the taxes which are actually going to be collected. It's the same thing. What it assumes is that we are going to be able to spread this tax more evenly across more number of people,
Okay.
and therefore reduce the impact of tax on each person. So that's what the difference is with respect to, when you say my revenue neutral rate is going to be 18%, and today I told you it's 27%, 25% to 27% if you add the two, what it really assumes is that we are going to reduce the taxes. The net collection of taxes is going to remain the same across the entire basket of the economy, but more people will pay.
Yeah, you're widening the net, effectively reducing the burden on. So effectively, you're widening the net, but you're reducing the burden on an individual taxpayer.
Perfectly correct.
Okay, but one question in from Hitesh Agarwal, and he asks, will service tax be abolished after GST? And of course, then there is a pain point there in that question where he says, like in restaurants where we pay VAT and service tax.
So the good news about restaurant is going to be that you only have to pay one tax, which is going to be GST tax. Today, we have a very peculiar scenario of having to pay VAT and service tax because of something which happened in the 1980s when we implemented something called Article 360-29A in our constitution.
Okay, but will that tax be lower? So even if you're going from paying two taxes to just one, will it end up being less tax paid?
Today, if you're going to ask me if I'm doing a pure services business, my taxes are going to go up because I pay effectively today about 15% of taxes. We take all the cesses like we discussed in the past. If you add all of that, about 15% is the net tax that I'm going to pay. That goes to about 18% because the revenue neutral rate as suggested by Arun Subramaniam is about 18%. Okay, why is it that? So a manufacturer who manufactures and sells ends up paying something at 25%, while a service provider only pays 14%. So they want to reduce the rate of tax on the manufacturer and increase the rate of tax on the service provider to have uniformity. And I hope that they have similar rates for manufacturers and service providers. Otherwise, there will be a big fight as to whether what I am providing is service or goods.
Fair enough. So if 60% of our GDP comes from service-led businesses, okay, and if services are taxed at 15%, and that's going to in fact increase to 18 or 19 or whatever final revenue neutral rate that the government decides on, will it mean that effectively, because we actually consume more services than goods in this country, we are going to be, we as consumers will end up paying more tax?
So the ultimate point is, if it's going to be a revenue neutral rate and the rate of tax is not properly put in place, yes, the answer is you're going to end up paying more taxes. Having said that, 60% of GDP which is contributed by services economy, a large percentage of that is also export.
Okay.
So, and a large percentage of the services are also input services for business. For example, a lawyer service is an input for a businessman. So, even though I pay 18%, if a businessman is able to take full credit of it, it doesn't really make him suffer on the long term with respect to that. So that is, there are two aspects to that. So on export, it becomes cheaper because you get full credit, and I'll show that the price actually will fall down. The net price will fall down, though the tax component may increase under a GST regime. Therefore, without doing anything, you actually make exports cheaper when you implement a GST regime.
But that's good news for the country.
That's very good news.
Okay, we have one more question. Why would stock markets react extremely positively once GST is passed? This comes in from Harish Mathur 84, and there's another one from @SKG9. How will GDP increase 1.5% because of GST? There's one more question, Bhavik Bavaria. What about Swachh Bharat and Krishi Kalyan taxes? And that is the question, right? This revenue neutral rate that we're talking about, will it be free of all these various cesses that we apply, or will it subsume all of that? So when we say 19, will 19 be the flat rate, or will there be cesses that apply nonetheless? So all those three questions.
No problem. I'll take one by one these questions.
Yeah, sure. So the cesses first.
So let's say the cesses first.
Yeah.
Okay. Technically speaking, when you talk about 18% as the revenue neutral rate, that should consume all the cesses which are currently there. Having said that, the power to impose cesses has not been taken away by this constitution. The power to impose entry tax, for example, has been specifically deleted.
This is in the Constitutional Amendment Bill.
Because all these taxes, when you have power to do something, always rear up to have some nasty issues. For example, in 2006-07, when all of us moved, or all the states came together and moved from the general sales tax regimes to the VAT regimes, as part of the discussions, one part was that we will keep the rates similar so that there are no sales tax wars between the states, and the rate which was supposed to be fixed was to include all cesses, supposed to include all entry taxes, and so on and so forth. But because the power to not impose entry tax was not deleted from the constitution, after a few years when you wanted to increase the revenue, you brought in through the back door. Instead of calling it entry tax or octroi, you call it as LBT or local body tax. Okay. So there is a tendency, whenever power is given to the legislature and it is pushed to a corner, for whatever reason, you'll start doing some strange things to be able to bring in. For example, though we may have 18% as the revenue neutral rate, if for example cesses continue, say the power to include cesses continue, and let's say they give it to the Congress and say we'll put 18% as the rate in the constitution, they may still increase the rate beyond 18% by having cesses on different products or transactions.
Okay, so at least we now know that cesses are not going to go away.
Yes.
Will this increase GDP by 1.5%? Though I think there's been a lot of debate. Will it increase by 0.5%, 1%, 1.5%? Will this boost GDP? And why is it such a positive event for stock markets? Those are the other two questions. We have one more question that came in on customs duty, saying customs duty has BCD and SAD, a basic customs duty and I think special additional duty,
Yes.
right? Will both stay? Will both go away? Will all of this get consumed?
First, I'll answer the two questions that you asked me first
GDP.
of stock market reacting in a particular way and GDP going up, and they are both related. Okay, because the reason why you are going to have stock markets react positively is because there's an expectation the GDP will go up and businesses will be able to transact in a more easy and a sustained manner, and there's going to be net stability in the tax collection in the country. So one of the reasons why, for example, if you take countries like Greece, I don't want to mention it for them, one of the big problems with Greece and other countries outside is that they have no stability with respect to collection of taxes, because either the officers are corrupt and they are not collecting properly, or there are enough mechanisms by which you are able to avoid payment of taxes. By having a robust GST that reduces down, and therefore the economy becomes robust, or the government becomes robust by being able to collect day on day, month on month taxes which it can use for welfare and for improvements. So that's the reason why. Why is that going to happen? Like I gave one example, export. Exports are going to automatically become cheaper. So take an example, a person who manufactures, who is going to have input taxes which he is not getting full credit of. Therefore, when I manufacture something in India today, it contains some component of taxes which are getting ingrained in it because of our faulty credit system.
So that adds to cost.
That adds to cost. So minute you are able to extract or filter out all the taxes and be able to separate it, even though the amount may look bigger, the net cost of the price of the goods comes down. And therefore, without having to do anything, no technological change, no change in supply chain, no change anyway, you are going to make your goods cheaper in the worldwide market, which means your exports get a big boost. So for example, today, Bloomberg, you buy all these laptops on which VAT is applied, but on which you have no output VAT liability, therefore it becomes a cost to you. And therefore, if you have to export out of India, your net cost has to incur this VAT component in it. But tomorrow, if VAT is available as full credit, you get refund of all of these taxes and the inputs, and therefore your services become cheaper without doing anything. I have not done anything. Other thing is, today we have a lot of problems with entry tax, in that we have a lot of blockage of movement between one state and another state, because whenever goods move into a new local body or new municipal area, he has to pay tax, he has to conclude. If you go to the check post, for example, you will have trucks waiting for 10 hours, 8 hours, sometimes 14 hours just to move into the state, and all of these problems. Hopefully GST, when it brings in, will reduce the amount of dependence on check post, because check post after GST comes in should only be there for the purpose of ensuring that vehicle emission and vehicle maintenance are maintained, and not for the taxes. So all entry taxes will go away, and they cannot bring it back in. That's the beauty of GST. This GST law is good because it stops you from being able to impose any entry tax, even if you want. So apparently Maharashtra Municipal BMC wrote to the Maharashtra government saying that every year I collect 2,000 rupees as municipal tax and entry taxes, 2,000 crores. You are going to have GST. Please account for this amount of taxes in your rate of SGST. Don't forget us. Okay. So you are going to have a rate increase to offset all of these taxes, but these taxes will go away finally. Therefore, logistics becomes faster.
GST and CGST, which is state and center, they will together be 18-19%?
Yes. So
Can you break
CGST.
that up for us?
Sorry.
Can you break that up for us? Like, SGST would be how much? CGST would be how much?
So Menaka, the thing is, this is a rate which has been, so the rate, like you said, 18%, is not the final rate. It's only a recommendation of what the revenue neutral rate is.
Let's assume it becomes the final rate.
If you assume the final rate, though if you say logically, you may say 9% to the center and 9% to the state. That's what you would think. But I believe the center will be slightly lower and the state will be slightly higher. The reason is because today VAT is imposed on excise duty itself. So when I have something like my price of goods is say 100, and let us say I have an excise duty of 12.5%, and let's say I have another 12.5% which I impose as VAT. That 12.5% is not on 100, but on 112.5. So effectively, your VAT becomes 14. Okay, and therefore you are always going to have a slightly higher rate for SGST as compared to CGST. That's what I believe. So it may be say 7 and 9. 7 and 11, something like that, or 8 and 9, something like that. There will be some.
And what if the state finance minister's council recommendation, which is I think 24.7% is the revenue neutral rate. What if that becomes applicable? You still think it will be an even split, or it will still be a split that favors the state than the centre? So we're talking in the range of 19 to 24.7 as the revenue neutral rate, right?
So the brilliant thing when we did some analysis of the numbers, when we're looking at these breakables of numbers. In the entire scheme, based on increase in taxes, all of these, okay, unless the rate comes to about 20 to 22% between that, states are going to be net losers of tax.
Okay.
Yes.
How?
How? Very interesting, right? One of the reasons is because of this breakup. Okay. Today, the excise duty which is collected from the entire country is about 1 lakh crores. Around that, whatever. So assume 10% as a sales tax on it. Therefore, there is a net collection of 10,000 crores by the states because of that. That's one of the reasons. That amount is gone because under GST you are going to apply on the base rather than on the tax on tax. There is a certain amount of regressive taxes which are there. Second is, today a sales tax person does not have to give any credit for service providers. So that's a tax which is collected and retained for himself. Technically should not have been retained by him. And similarly, services which he has on CST transactions, he is collecting 2% and retaining it. So if you combine these, you will find the net collection of taxes on the current regime is higher as compared to what it will be if you do away with all of that and have this uniform 18% imposed on that. So unless about 20% or 22%, the taxes are not going to be even. When I say 22%, what I mean is effective rate of tax which the state should collect should be between 11 and 12% for it to be able to break even of what it is collecting today.
Badri, you've explained how the current system works. Is it possible for you to take us through an illustration as to how, assuming that the rates come in at what they are, how the GST will, be implemented across the supply chain?
Sure.
So should we do that for products?
I think
we can do it product wise.
No,
No, so we covered the impact on GD. Yeah, will BCD and SAD get subsumed into GST is the question that I'll tell you who asked this question. Anjani Kumar said, will both stay?
Okay.
We answered GST. Somebody's asked about a good like natural gas, saying, will that, what happens to that? But we'll get to exemptions in just a bit. First, let's just cover this.
Okay. So the thing is, the good news and the bad news are as follows. The good news is there will be no SAD. The good news is there will be no CVD. You should give the good news first, right?
Always.
Always.
Always helpful to also explain CVD, countervailing
I'll
duty,
explain.
SAD, special additional duty.
First the news. First the good
First
news.
Always.
Bad news. Bad news is BCD is going to continue, and on all imports into India, you are going to have to pay a new tax called IGST. Okay. What is BCD? What is the CVD? And what is the SAD tax of SAD? Okay. It's a real SAD tax of SAD. Okay. Reason is I'll tell you also. Okay. Basic custom duty is, as I said, what is customarily paid when you enter the kingdom to pay the king. So he keeps it, no credit to anybody, it's in his pocket. So India is going to give no credit of any basic custom duty, it's going to go into its pocket, remains there, no problem. What is CVD? CVD is actually not a correct term to be used for this. It's called countervailing duties. Okay. What is it countervailing? Countervail means to offset something else. What they say is like this. They say if you only impose basic custom duty on any import into India, the person who is locally manufacturing the goods in India, he is having to pay excise duty, he is having to pay VAT, and therefore if you do not offset the countervailing aspects of excise and VAT on import of goods into India, because he has not paid any excise duty or VAT in his country, he only pays BCD, he is going to get an advantage as compared to me. And therefore, they have a countervailing duty equal to excise duty called CVD, and they have something called SAD, which is 4%, which is to countervail the effect of VAT collected in this country. Okay, so therefore, any import into India today has got BCD, which is the basic customs duty, goes in the pocket of the government. Bye bye. That's going to happen even in the new regime. There's going to be a countervailing duty to offset the excise duty, and there is an SAD on the VAT countervailing portion of this. Why SAD is really sad is this. Under CST, which is the Central Sales Tax Act, Section 5(2) of that Act says that on import of goods into India, there can be no levy of VAT. Therefore, on import into India, you cannot impose any sales tax or VAT. But you are imposing SAD to countervail the effect of VAT. When really the government did not want to collect, legislature did not want to collect VAT on that import, you still collect. And you say, as if benevolently, that if you resell in India and you pay VAT on it, I'll give you refund of SAD. Very nice, no? Truly sad for that reason. Okay, and they got a correct name also, Special Additional Duties of Customs. Really a sad duty of customs. Tomorrow, what's going to happen? There's going to be no VAT. There's going to be no excise. Therefore, CVD and SAD is gone. But what you replace, you still want to countervail the effect of local transaction of CGST plus SGST. But they are going to deem the import of goods into India as an interstate supply, and therefore on all interstate supply, BCD will be levied plus IGST will be levied. So CVD and SAD will be replaced by IGST. IGST will be fully available as credit against all output transactions that a manufacturer undertakes and resells, and therefore will become through a credit chain. But BCD will be a cost to the importer.
Okay. I think
BCD will be.
Yeah, just a question, because the answer to this question probably will also answer another question that was asked on GDP. What I'm trying to understand is, will the implementation of GST in any which ways arrest your tax leakage that is happening? Will it have any impact? Because if the answer is yes, it would also mean that it will be positive for fiscal deficit and hence good for the stock markets.
Answer is perfectly correct, yes. So fiscal leakage will reduce, as I said, because of the fact that ultimately is a consumption based tax. So any taxes that you avoid paying in the earlier stage is going to fully available, will have to be paid once again at the next stage. I'll give an example. One of the things that I said was it's a multi-point tax. I'll give an example of what happened pre-2006. In general sales tax, it used to be a single point tax at the first point of sale. So when a manufacturer sells to a trader, he pays sales tax, and then he did not have to pay any taxes beyond that. What happens if the manufacturer does not pay any sales tax on that transaction? Then no taxes are collected throughout the entire chain. Correct? Similarly, in the last point, if you say no, I don't want the first point, I want the last point, you go back to the last point, you are able to tax the entire value addition in the supply chain. Assume, for example, it's easier to collect taxes from the manufacturer, more difficult from the retailer, but retailers you get full value addition. But the chances of fiscal leakage at the last point is much more. But take a situation where at every point in the supply chain I am having to pay taxes. For example, before you go from the manufacturer to the final consumer, you have a manufacturer, a distributor, a dealer, and then a consumer. Let's say there are 4 stages. It can be there, which is very normal. Wholesaler, retailer, and then final this thing. If, for example, the wholesaler does not pay taxes, he says, I don't want to pay taxes, he gives a parchi and gives it to you. Retailer ke paas aaya, no taxes, which means no credit. But on his goods which he is going to sell to the consumer, he has to pay full tax, which means that he does not get any credit and therefore has to pay tax fully on it. Therefore, he has no incentive to buy goods from somebody who has not paid taxes, becomes neutral to him. And therefore, he is throughout the chain, the people before the final supply have no incentive to avoid paying taxes because fully available is credit to the next person. Today, excise duty is not available to the trader, therefore trader feels that can I avoid paying excise duty. But once IGST or CGST and SGST is applied, he has no incentive to avoid paying that tax. You will say, "Arey bhaiya, last retailer will avoid paying taxes," but by then 90% of taxes have already been collected because the value addition in the last leg may be very small. And therefore, this is a way of protecting the entire fiscal leakage. So there is no incentive for you to be able to avoid paying taxes in any state. So people automatically are made to comply with the law.
Okay, so I suppose that's why you have such variance in what is the ideal revenue neutral rate as well, right? Because it depends on how much you're estimating will be the compliance level in the economy, and therefore, one committee might say the revenue neutral rate is 18 or 19%, the others might say it's 24%. I'm going to give you a second to have a sip of water if you want, Badri,
Sure, no problem.
because, I think in the next part of this broadcast, which is in the continuing 15-20 minutes, we're going to try and look at 3 different supply chains, as Alex asked for. I think one will be a consumer product, like maybe a soap or a detergent, the current taxes that are levied on it, and hence what will be the impact of GST. That'll give us a sense of how the consumer-facing industries, the FMCG companies, will be impacted. Then the second one will be an exempt industry like textiles. So we'll talk about what happens when the current exemptions are replaced by GST and whether the textile industry will be positively or negatively impacted. And the final one we wanted to pick, Badri, was a service which was I think the supply of manpower, as you said, right? So how will the service industry be impacted by the application of GST? So a quick sort of illustration starting with soap.
Yeah,
Are you
we'll
going with
start
soap?
with soap.
Yeah, let's start with soap.
We would really want to clean up this room.
Soap.
We'll start off with soap. Okay. So what I'm going to do is I'm going to do a very simple illustration. Okay. I think the supply chain in soap is fairly complex. Okay. So for example, somebody was saying one of the big FMCG companies says that, sir, we are really reaching saturation in India. I said, why? What is the great thing? Why are you reaching saturation? Sir, I sell from 10 lakh stores in India. There's not too many more stores that I can go and sell through. So he said, okay. So supply chain is fairly complex, but I'll try and take a fairly simple supply chain, and I'll show why GST is good for this kind of setup, okay, product, and then we'll take it from there. And I'm going to have Ashish from my office help me through the numbers, okay. I'm going to take a very, very straightforward, simple supply chain, only one trader and one consumer, okay. We'll try and take in the same state. We're not doing all these complications of interstate and all. And I'll show you how this illustration works. So I have a manufacturer, I have a trader, and I have you and me, which is the consumer. Okay, very, very simple. Okay. Now, let us take, for example, what I said as a manufacturer. What will it be? So let's say, for example, the manufacturer cost to the trader is 100 rupees. That is his cost, which is there, what he wants to sell. So I'm going to put 100. He is going to have to pay excise duty on this. Okay, there is no exemption for this. Take a simple example. Therefore, let us say 12.5 is the rate of excise duty on this. So I have 12.5. I put this in red because there is no credit available in the current scheme for excise duty in the hands of the trader. It becomes part of the cost of his doing business.
Is 12.5% the rate generally
Yes,
applicable to
generally for
FMCG
yes.
companies? Okay.
There is no relief for FMCG companies.
And can you write down soap for us so that all the
Sure.
viewers who are looking at your whiteboard know clearly that this is the soap illustration, so to speak?
This is a clean illustration.
Okay, then.
So
All right, good. So 12.5.
12.5. Okay. And then I have a VAT which is imposed on top of that. Okay. Which is, I'm going to assume 12.5 again for the VAT FMCG goods, which is approximately correct.
Okay.
So since 14 is imposed on 100 plus 12.5, so approximate rate for this will be about 14%. Correct, Ashish? Till now? Okay. Assume, for example, the trader wants to make a margin of 50 rupees. So he says, whatever happens, I want 50 rupees in my pocket. You do whatever you want. Let the consumer suffer, let the trade manufacturer supply. My 50 rupees is what it is. I am showing as a trader, you may say, what is there? 50 rupees in a soap is very, very high, but it is not, because I am only showing one trader, but there could be a super distributor, dealer, so it's going to have a few people. I have combined all of that into one trader, which is going to have 50 rupees. So now what will be the 50 rupees that you will apply to? 12.5 plus 100 is already his cost. Therefore, if you add 50 to that, how much that come to? 162.
162.5.
This is what he will have to
Why
pay.
did you, the 14 is because it's creditable, you've taken
Credit
the
available,
14.
that's what I've taken it as blue.
Okay.
I was told that green may not be something
No,
which
that's fine,
everybody
that's
can.
fine. Yeah,
So
I just want
blue
to
is something which
understand.
is
Yeah,
there.
okay.
Okay, blue.
Okay.
So that is there. Now on 162.5, when I impose 12.5% tax, how much does the number come to? 20. I'm putting it as red because that's the effective tax that he has to pay, because consumer gets no credit of any VAT paid on that. Therefore, what's the price to the consumer?
182.5.
Okay, so in the current regime, when I manufacture goods of 100 rupees in the hands of the manufacturer and I have a 50 rupee margin, my price to the consumer is 182.5. Okay, now let's apply on 18%, which is, let's say, the revenue neutral rate, which will be applied to FMCG product.
Correct.
Now let us see how this thing works out. Okay, interestingly, again 100 rupees is my price of goods. Correct. What is the tax on this? 18 rupees.
Yeah.
That's what, 18%. Very easy. I have not made this a mathematical challenge. Okay, I try to keep it as
Thank
simple
you.
as possible. Okay. Now the trader, for him, see, this 18 is fully available as credit, and therefore when he has to add 50 rupees as his margin, it's not on 12.5 plus 100, but only on 100. Therefore his price is 150. But importantly, here if you see, the only tax is on the value addition from a VAT point of view. There is no central taxes on value addition. But here you are going to have higher quantum of taxes because the value addition is going to be taxed higher. So that number comes to what, Ashish? When you put 18% on
27.
27. So lo and behold, at 18%, the price of the goods to the consumer is
177.
great, right? So you got immediately a 5.
So you're saving 5 rupees 50 paise on this.
On this immediately. Now, assume for example, we actually, the Arvind Subramanian report is not accepted because you will know that this 18% has been calculated on the basis that we are going to tax precious metal at 6%. So those are the fine lines which nobody reads. But assume for example they are not able to tax at 6%. I'm sure your jewelry, you don't want it to be taxed at 6%, right? It will sink his heart and your heart. So let's say for example that tax rate goes up to say 12.5 plus 12.5, 25%, which is today what the rate would have been if I just transferred from here. Now let's look at these numbers now. So I have 100 plus 25 rupees as my tax, correct? So what happens here? Again 50 rupees only on 100, therefore it becomes 150 plus 37 now becomes the tax which I have to collect on this. Therefore if I impose 25% tax on FMCG, then my output becomes
187.
which makes it
More expensive.
than today. So this rate becomes extremely crucial for our consumers. Okay. So while the stock market will be very happy saying it is 18%, the minute it goes to 25%, this very same stock market will tank.
Yeah. So that's why the importance of what the revenue neutral rate finally would be.
Is extremely important.
Of course. Just a quick question on, and this was prompted by your team itself, so I'm going to ask you the question anyways. You've prepared this answer. What is the split of revenue in terms of, will this 18% be applied at the as a central tax or a state tax, this 18 rupees rather?
So 18
how will it split up between the center and state revenues?
So effectively speaking, the way I see it is, there are two splits possible. One is what everybody is like a revenue neutral split. If you say for example, it would be 9 plus 9.
Right.
But I don't believe that's what the number is going to be. It's more likely to be 7 plus 11. So
And 11 going to the
11
state.
going to the state. So CGST plus SGST. That's really how I feel the numbers will go. Otherwise, the reason, it's not because of any reason. If I apply 9 plus 9, okay, effectively therefore on 27, you're going to get half of the amount. So take for example, in this example, how much has the center collected? 12.5 only.
Yeah.
What's half of 27? It's about 13.5,
Right.
correct? 13.5 plus 9 comes to how much?
13.5
Plus 9.
22.5.
So 22.5 is what it's collecting in GST at 18%,
Okay.
while it only collected 12.5 under the old regime. If I
Okay.
split it equally, actually it
okay.
should not be. This 9 should not be there. It
Yeah.
should be 13.5 only. You're right. Because this 9 is fully available as credit.
That's what I was just
So therefore 13.5 is what it collects.
So earlier it was getting 12.5. Now
So
it's
early-
getting
13.5.
13.5. So
I'm
that's
right.
just a buck more.
Little bit more.
Yeah.
But think about it. In the states, if you see on the other hand, was collecting 20.
Right.
Today, it's collecting only 13.5.
Correct. So that its revenue goes down. But
And therefore, there has to be a split which is in favor of the.
just to step away from FMCG for just a second, though you've demonstrated very clearly to us that if the revenue neutral rate comes in at 18, an industry like FMCG goods will become cheaper.
Yes.
And that is a big benefit to
Very, very big.
consumers. It impacts inflation, etc. But if it's at 25, the R&R, then FMCG products become more expensive. A quick question on what I was trying to understand is when you sort of split it between center and state, and you say that the state might end up with 11 and the center might end up with 7, hasn't the center already promised states to make up for any revenue shortfall? So will it really matter what the split is? Because the center has already said, hey, look, states, whatever revenue you're making now, if there is a shortfall when we move to GST, we'll pay you the money.
So technically speaking, this promise has been made on the basis that on day one, there will be no loss to the states because they are going to get revenue from the services which they never got earlier. Second is that it's only for a period of 2 or 3 years that they're going to promise to pay for the compensation. After that, you're on your own. This is not for an ever and ever and ever and ever and ever in compensation. The third is the states are unsure as to how much of these services will actually get retained by them because services that export are going to be not taxable. Services which go into businesses may get taxed in other state, and therefore there's a lot of uncertainty on how much of the services tax which they will collect will be retained by the states. So there is some uncertainty with respect to what it is. Therefore the split to say at least on goods you must retain whatever taxes that I am previously collecting is important.
Okay. Any questions on FMCG or soaps, detergents or anything else? Okay, so we have you have a question? No. Oh, we're good. Okay, so I wanted to say hi to Lakshmi and Imran, who have said they joined in halfway through and are a little worried that they missed quite a bit of it. So hello guys, and you can watch the full recording so far later on. But if you've just tuned in, this is a GST classroom, may I call it that, Badri? Basically, it's a refresher course on what GST means and the impact it will have on various industries. So far, Badri Narayan, partner at Lakshmi Kumar and Sridharan, has taken us through the concept of GST, how it differs from the current indirect taxes that are levied. And then now we've moved into illustrations to try and understand the different industries and how they're impacted. We've just finished with FMCG using soap as an illustration. And I think the second thing we're now going to do is, are you doing services or textiles?
We do textiles.
Okay, so why textiles? Explain why you picked textiles as an example and then take us through exactly in this fashion the change.
So textiles is a very important area in India, one because it contributes heavily to our economy, and in addition textiles is one area where there's been constant flip-flop of tax policy of the central government. Okay, so today to large extent these products are input tax, which means on the output there is no tax, but whatever input and input goods and on which service tax or excise is being paid, it becomes a cost to them. Therefore, they are not paying any output tax. And also important because textile industry, if there's a small variation in the price, you end up losing the market or export market from India to Pakistan or Bangladesh or other countries. Therefore, it's very, very critical that we have the pricing correct. In the new regime, where they're going to have minimum exemptions because they want to have a huge tax base, there's going to be some taxes imposed on textile. That's the expectation.
Can you draw it out for
So
us?
we're going to draw that.
Okay, great.
So therefore, what is going to happen is, I'm going to slightly make a variation on this. Okay, let's take these numbers out a little bit. Try and put some fresh
And the
numbers.
soap.
And the soap.
Of course. Just give me a minute. Let me just remove this. I need to make one addition right
Can you
now.
give me my charger for my bag? Give me my bag. I'm going to speak there.
Okay, you good? Are we good? I'm going to make one variation on this.
Okay.
So the first thing is, this is for all those of you who have any doubts. Okay. Again, very, very simplified version. This is like an illustration for any exempted goods which may be played out in the new district. Okay. On textile, there is no excise duty levied, and there is a concessional rate of 5% which is levied on VAT. Okay, so there is no excise duty, there is no. We are going to now try and see how this plays out both under GST, where there is likely to be a tax of about 12%, which is a concessional rate under the GST, which will be applied. We are not looking at 18%, we are looking at 12%. Okay. we also have, as I said, these are all input taxed commodities. Okay, so I am going to take a situation where there is an input tax of 50 in the form of service tax and excise, which is not available as credit from the parts from his suppliers. Okay, so you're going to have 50 rupees, which because there is no output tax is going to form part of the cost of your goods being sold. So now let's take the illustration. Okay, take a situation where I'm going to remove this and I'll show you in a minute something little different. Okay, so 1000 rupees, assume for example, is something which is you buy something for, let's say, for 1000 rupees, you manufacture a textile article for 1000 rupees. What is the excise duty on textile? 0. So that goes to 0. VAT is 5%. So how much is that? It should be 50. 50 is available fully as credit. Take a situation, he wants to make a margin of 100 rupees on this. So a trader through his system wants to make a margin of 100. We'll try and make it very, very simple. So what is his cost when he's going to resell?
1,150.
No, 1,100 because 50 is available as credit.
Creditable.
Okay. Plus what's 5% of 110? 55. So effectively
5% of 110.
1,100.
No, sorry.
That comes to your number that you're seeing today when you go to the shop to buy a t-shirt is 1155.
Okay.
Make sense? All on board? Any questions? Let me know now. Okay. Think about, interestingly in this, I have got 50 rupees of input taxes which has become part of 100.
1,000.
1,000, sorry. Now, under the new GST regime, I get full credit of all the input taxes.
Correct.
Therefore, this no longer is red, this becomes blue.
Correct. So your cost becomes 9,050?
Yes, 950.
950, sorry, not 9,050. 950.
So, you really get 950, on which you pay only 12% tax because that's the concessional rate which is being proposed,
Okay.
which comes to
115.
which is again another credit fully.
Yeah.
So for him, he wants to make a margin of 100.
So it becomes 1,050.
Very good. Plus on 1150, what is the
126. This is at the rate of what percent?
12%?
12%. 12% on 1,050.
1,050.
Okay, fine.
And 12% is exactly which tax you were referring
So
to?
the concessional rate, this is the CGST
Correct,
as GST.
okay, so yeah,
this
okay.
is your GST rate, 12%.
So is the one on the right the state rate and the one on the left? Is that how it works?
This is the full rate, which is a combination of both state and center.
Okay.
This is what they're going to collect.
Concessional rate according to the Arvind Subramaniam report.
So what is the number which comes out to now?
1176.
See this. You see how this is balancing out. So the textile industry is very worried today for this reason.
Because the cost will go up. I
So
mean, the
even
price
though-
to the consumer will go up from, let's say,
So even though it went
1,155.
from 1,000 to 950, your price actually goes from 1155 to 1176.
Yeah.
And the reason is because you are going to have more taxes on the value addition throughout the system. Even though you get more taxes input, you are still having to pay a higher amount of tax on the output.
Okay.
So that's the reason why this system becomes little bit of problem for the GST regime. So today the textile industry is struggling to figure out what they should ask the government, whether it should be 0, in which case this 50 may go up higher and higher because trader also will receive input services, it will have whatever your commission agent services, this fellow will have advertisement services, so on and so forth. So all of these are going to become red, in which case do you still want to be input tax, but then what does that number look to if he goes through the trading community? Or if he says no, I want a concessional rate, then how does the number look through if he goes through to this? Therefore there is a bit of a confusion in this space as to what you should ask the government. And this is the fate of many exempted products today. So the government will have to tweak that 12% up or down, maybe it makes it 20%, to bring it in line with what it is actually paying today. So there is an issue. Why GST? This is also important because, like we said, while FMCG starts paying less amount of taxes, textile pays higher amount of taxes. Therefore, overall base is kind of uniform. So throughout the entire system, you are going to be able to collect more taxes. That's the logic.
Okay, Patri, I have a question that's come in from a viewer. Shashank Raj asks, what will be the situation or how will it change for retailers in Bihar for textile after GST is applicable? I suppose what you explained to us here as a textile illustration applies across all states, all cities in the country. So effectively, the selling price to the consumer will go up, as a result of which maybe demand will go down or not. You don't know, right?
Again,
but you still have to wear clothes.
You still have to wear clothes.
Yeah.
Maybe less number of clothes. So, but the key thing is, there are few points in this which you have not looked at. For example, there are some input taxes which the trader gets. Say for example, lawyer services, or chart account services, or commission agent services, which is a cost today. So this number may be slightly higher or lower depending on what is the quantum of this in the value addition chain. Okay, because all of these will become blue in the new regime. Okay, which is going to be commission agent. So to be able to predict exactly what will be the impact, especially in a complex supply chain like textile, where you have depots, where you have warehouses, you have multiple distribution channels, and goes all the way down to lakhs and lakhs of stores that are actually going to sell. This supply chain becomes very difficult to figure out what it is going to be. But there's a possibility that in a scenario like this, that you might actually have a net tax even if they apply a concessional rate of 12% on textile.
Okay, since we asked you a question regarding a textile sale in Bihar, which came in from Shashank Raj, he's asked one more question. In Bihar now 5% VAT is levied. What will be the change if GST is in action?
So if you see the Arvind Subramaniam report, he says all VAT and excise duty which are on concessional basis, say 5% VAT and let's say 6% is the excise duty, because generally wherever the VAT rate is 5%, on those excise duty is about 6% to 7%. That's really the kind of this thing. So if you add the two together, it effectively becomes 11 or 12%. Yeah. So they are going to replace all 5% duties with 12% as per the Arvind Subramaniam report.
So which mean immediately, can I say it's just an increase in the taxes paid, right?
So the value addition at every stage, you'll have to pay higher amount of taxes whenever you're going to have a situation of 12%.
So the simple understanding of this is wherever there were lower rates offered as incentives, or either for an industry or a region, etc., those will now get replaced by higher rates or more uniform rates, even if they are concessional rates, and everybody will pay higher taxes than compared to earlier.
So they are still trying to figure out what they want to do with respect to things like area-based exemptions, because there's a promise that whatever incentives I was promised to provide in the earlier regime, I'll continue to the new regime. But if I give an exemption, like I said, there's no point in giving an exemption here. Because I give an exemption here, I get fully taxed here.
Right.
Therefore, what they're saying is, you charge the tax to the next person, and we'll give you a refund of whatever taxes we collect from you. So that's a way of converting an exemption scheme into a refund mechanism. That's generally how they will convert. It's going to be complex, but that's how they're going to try and do that. But that will have no impact for you as a consumer, because your price will continue to be higher.
Okay, so does this mean that potentially, from the way we understand it now, irrespective of what the revenue neutral rate is, those textile companies that are listed on India's stock exchanges are not going to be in favor when GST is applied, because effectively, A, their consumer demand might come under question, the process in which tax is applied to them will be a fairly big rejig?
I don't want to be the reason for any stock market fluctuations on Monday when the stock markets open. But suffice to say, today the textile industry is a fairly fragmented industry, because even the companies that are listed have to receive goods from a variety of smaller suppliers. That is one. And second is, supply chain is also much more extensive. Okay. What I am saying is, if you take Arvind Subramaniam rates to be sacrosanct and you apply them, there's a net increase for the textile industry today in a very, very bare bone, simplified version. But the bigger problem for textile industry is there is still confusion among the different players who form this textile industry sector as to what they should ask. whether the current thing should continue, because for some people, where for example there is some excise duty levied on output in some categories, they may be happy if the GST comes. For some categories where the value addition is smaller, they're happy if GST comes because the rate of tax on smaller value addition is lower. For some which are branded apparel, where the value addition may be higher on account of this thing.
Branded apparel.
Branded apparels, branded goods, where you pay a premium for the brand. For them, there is higher amount of taxes, which may value addition may be there throughout the system. They may be having more expenses, more advertisement costs, and so on and so forth. Therefore, it varies. So, for no single industry you can say, or no single company you can say, it will go up or down. It will depend company to company, product to product, area to area. But in a very simplified form, there is a lot more uncertainty today for textile industry than it was before. And it might only get tweaked once you implement GST, see the real effect of GST and then tweak it, which may in the meantime, if it takes 2 years, 3 years for them to rejig it, we may have some players who will benefit and some players who will suffer.
So
really
broadly, can you, it's a very simplistic question in that sense, but assuming that the prices of these products are going to go up if the rates remain the same as they are right now, can you assume that a lot of retailers will then have to sacrifice on margins going forward then in order to protect demand?
So I would say that the persons who will really suffer will not be the retailers, but will be the manufacturers if they want to keep it. So according to me, the real hit will be taken by the manufacturer, because for a supplier already the margins are fairly low. To squeeze them further will be very difficult for the manufacturers to do, and consumer may not buy based on this. Therefore, the real work will have to be done by the manufacturer in getting his process right, get more efficient, and try and figure out if he can reduce any cost based on it. You will understand that his cost may also come down, because the supplier today who is supplying to him also may reduce his cost. So the key thing is going to be for the manufacturer to be able to manage his portion of the leg, so that he is able to reduce his cost, so that instead of 1000 or 950 it becomes 925.
Which will then
will offset this 1176 below 1115.
Okay, so we've got the idea of what happens to textile now. So we've done soap or FMCG, we've done textile, and I think you're now going to do an illustration with the service industry, so that we get an idea of what it means for service-based industries and how GST will impact them. And in case you just tuned in, this is the BloombergQuint office in Mumbai, and we're doing a refresher course on GST thanks to Badri Narayanan, who's a tax partner at Lakshmi Kumar and Sridharan, one of India's leading tax law firms. And through the morning today, we've been trying to understand the concept of GST, how the current set of taxes will change once we move to GST, and what impact it might have on a few industries. So we've covered FMCG, we've covered textiles, and the next one is the service-based industry, which is the supply of manpower. Badri?
Supply manpower. We'll take it that way. Okay. So I'm going to take a very simple illustration again. Okay. So, like I said, service tax, unlike your sales tax, excise, is already destination-based consumption taxed, and therefore the implementation for service providers is little different from that of the manufacturer in this thing. So they don't have to unlearn things. They'll probably have to learn a few new things, but they don't have to really unlearn anything in this. So I'm just going to put manpower supply. I'm just going to take a very, very simple illustration to show how this system will work.
Sorry, just a question. When you say manpower supply, do you mean like a company that does contract labor, like maybe team lease, or do you mean like someone who does high-end IT services, like an IT company or something like that? Though that's an export of a service. So
the answer is it doesn't matter. For the purpose of tax, there is equanimity between the two types of supplies. Okay. So I'm just going to take a normal supply. You can replace manpower with chart account services, or IT services, or anything like that. I didn't want to take telecommunication or some other services because there are some peculiar rules today. Okay. So we don't want to complicate it. We just want to give you an illustration of how this services industry is going to operate. We can try and understand what it is really going to be like. Okay, and I'm going to do like a 2-layer supply chain. Okay, so there are going to be
Badri, while you write that out, I just wanted to tell our viewers, I think we've gotten some insistent questions from Shashank, Anup, Shankar, who all want to know what the net impact on consumers will be. And I think our timeline has filled up with questions from the consumer point of view. We will come to that from a consumer point of view just as soon as we're done with this illustration.
Ashish, so we're taking suppliers or no?
VAT
can take
credit,
it.
VAT credit of 100. Service
So
provider providing for 10,000.
100 is my,
VAT credit.
okay. And the service provider
Supplying
is
for 10,000. 10,000 to the consumer.
Okay,
like a very simple one. Okay.
simple. So that's the cost of the service, 10,000.
10,000 the cost
Yeah.
of the service. So what is the service tax that he pays?
15%.
15%. So
1,500.
so what is the cost to the consumer today? Very simple.
11,500.
Okay, very straightforward. No
Yeah.
problem at all about it. Now, this input tax of 100 is, let's say, the laptops, the materials, furniture, all of these. Generally, for a service provider, the sales tax components are low. Employer services are going to be exempt from GST. No country in this world taxes employment services. Therefore, all of you who are employed, you don't have to pay service tax or GST. So be happy on that. So that becomes, because that's a major cost of any services industry, so that becomes really a tax which is not incorporated into it. But there's about 100 rupees of supplies which you have received on which you got no credit. The chairs on which you are sitting is a cost, real cost. Though they are used for business, hopefully. Okay? We'll use it that way. Now in the new regime, what happens? You have input tax which is available fully as credit. Therefore, what happens?
The cost reduces.
Therefore, let's say, for example, our cost reduces. By how much?
9,900 is what it becomes, right?
If the rate is increased.
But then the rate is increased.
So take 9,800.
9,800. Say
Why?
because
Sorry, can you explain that to me? Why 9,800?
reason is because 100 rupees is on 12.5%.
Okay.
But if it's going to be inputs at say 18%, so that may go from 100 to 200 or 150. That's the reason why he's saying. But assume, for example, we'll keep it at 100. You want to keep it at 100, 200?
100.
100 only. We'll make it easy. So 9,900. Okay. So on 9,900 at 18% taxes comes to how much?
1782.
Because the service tax rate will go up from 15
Correct.
to 18.
Yes, absolutely. So I should actually have. Yes. So now it comes to.
How much is it?
1782.
1782.
So what is the net amount which comes out to for this?
9,900 plus 1782.
11682.
11.
682.
No, actually it might be, I think if you're counting 9,900, right?
Yeah.
Yeah, 1168. Yeah.
Effectively becomes. Therefore, what you found? Actually, this should be.
In red,
In
right?
red.
Yeah.
So by increasing the rate of taxes, even though you may get more input taxes, and therefore your amount may be reduced to that extent, your cost actually reduces, because the rate is going to be at 18%. All of you have to pay more taxes. Therefore, we have come to a conclusion that services are going to be more expensive in the long run in this country.
Okay.
And it's also because the government feels that it is not contributing enough to the exchequer, even though it's a major portion of this, because manufacturing entities are already paying 25% taxes while you are paying only 15% taxes. We'll reduce their rate, we'll increase services rate, and therefore. But the key thing is, if you are an exporter, see this, if you are an exporter, without doing anything, you are now going to export at 9,900 as opposed to 10,000 rupees, which means that exports become cheaper immediately, which means Infosys, your TCS,
all of the
all
IT
of
companies.
these IT companies or any services company which are exporting are all going to, and if they continue to price the same way they are pricing today, they're going to have a net increase in their cash flows and profits.
Or they become more competitive and they have the ability to bring prices down if they want to.
Assume,
Right?
for example, they're already very competitive.
Right.
Because let's say India IT industry is the biggest industry in the world when it comes to outsourced services and so on. There is no country which can take away.
Yeah.
So even if you are currently at a price which is fairly good, If I pass on 50 rupees of this benefit to the consumer and keep 50 to myself, I still am able to make more money in this entire regime by reducing my cost.
Okay. Badri, I thought we were keeping it simple, but we have a couple of people here saying that was Mahmooda and Shubham saying can't understand but still watching. Okay. So I'm going to try and recap what you've told us so far.
That's a very good thing, especially if a lawyer is speaking.
Yeah.
Should be very few people should understand what he's saying.
Okay, but that was not the intent of this morning and afternoon. So just to recap a little bit of what you've said so far, right? You said that GST is not one singular tax.
Yes.
It will be actually two taxes, and if you take interstate supply of goods, three taxes that will replace the plethora of indirect taxes that we have currently, which is customs, excise, sales of VAT, and service.
Yes.
Right? So four taxes will be replaced by three.
By 3.
Conceptually one, but three.
Well, some basic custom duty will continue. So custom
Right.
duty will be there.
Yeah.
So you're going to have CGST,
Yeah.
you're going to have SGST.
And IGST.
So IGST is really an overlap between the two, but let's say
Okay,
so
so
if you're
three.
going to have 4 if you
So-
add customs.
Correct.
But yeah, but effectively it will be 3 taxes instead of 2.
Okay.
Instead of 4.
Okay. The revenue neutral rate, as you've already told us, is critical
Yes.
because it is based on the assumption that more people will get included in the tax net,
Yes.
and therefore the rates ought to be lower.
Yes.
That works both also as an incentive
Yes.
to people to join the
To join
tax
the tax base.
the tax net, and so we're hoping that the rate will be closer to 18% than to 24.7.
Yes.
18 is what was recommended by the Arvind Subramaniam panel. 24.7 was what was recommended by, I think, the State
National
Finance
Policy.
Minister Council,
Yeah.
right? So hopefully we'll come somewhere
Somewhere.
in between. Now, assuming we come somewhere in between, 18 or 20. You want to break for a sip of
No,
water?
go ahead.
Okay. So assuming we come somewhere in between, that's between 18 or 20. Can we examine the impact on various stakeholders in the economy and various industries? Because effectively, for a business audience, it's all going to boil down to, is my business going to have to pay more tax? And if not my business, if my consumer is going to have to pay more tax, then that's an impact for me.
So the answers to that is, let's take for example, instead of dividing it sector wise, let's divide the economy into manufacturers, traders and service providers. Let's take
Okay.
these 3 as
Okay.
the base because
Cool.
it becomes easy for
Sure,
us.
fair enough.
Today, for the manufacturer who is paying full taxes without any concession, GST is going to be a boom.
Okay.
So manufacturing industry will have a net boom by GST
Okay.
because today they pay effectively 20, 25, 26% taxes.
And they could very
It's
well
gonna
come down to
to
22, 20, 20, 18, 19, whatever.
And there are nuisance taxes like entry tax and all will go, and therefore it's going to reduce the logistic time, and therefore manufacturing industry will get a boost.
Okay, so manufacturers benefit.
So manufacturers benefit.
What about
according to me.
traders?
So according to me, traders also benefit. The traders benefit because today excise duty which is being sold to them, which is being included in the price, becomes a cost to them.
Okay.
And therefore, really sometimes what happens is that their margins get squeezed when they go to the manufacturer saying that you're charging me excise duty, but I cannot take benefit of that when I am going to resell. Therefore, there is an inherent amount of taxes which get ingrained in their margin.
Right.
So once you remove the excise duty component from the trader's margin, then really the prices to him come down and he's able to have a more stable margin, and therefore he
Okay.
gets full taxes which is there. The problem for him is going to be that the manufacturer does not pay the taxes, or the person before him does not pay the taxes. If his margin is 2% and his output is 20%, and he does not get any input 20%, then he's really screwed.
Then his margin. So basically, it is in his benefit if the entire chain stays within the
Stays
tax
within,
net.
exactly.
Okay. So manufacturer benefits,
Trader
trader also
benefits.
benefits. What about the consumer?
Service provider.
Service provider. All right.
Service
First then.
provider suffers.
Okay.
So because you're going to have to pay higher taxes than what you ever paid in your
Right.
life.
Yeah.
And therefore he's going to pay.
But that's simply because the rate will go up from 15 to 18
15 to
or
18.
19 or whatever the final rate is.
Final consumer
Yes.
is going to be a maybe. Okay.
Or maybe.
A maybe because it depends on the basket of goods and services that he's going to consume.
So if you were consuming more services than goods, you're
really
in the
suffer.
deep end of the sea.
I'm really
And if I was consuming more goods than services, then this is really a good transition for
and
me.
it can happen. So if for example the urban consumer is going to have more amount of services that he consumes as compared to a rural or a tier 2, tier 3, tier 4. So the profile will change.
Right.
So if your basket has got more goods, then it's going to be cheaper for you. The basket has got more services, it's going to be more this thing. Where there is a little bit of a problem is going to be in baskets which are going to contain certain exempted goods like textile.
Correct.
So in those situations, it's going to be up in the air. But the general feeling is that whenever GST is implemented, in the initial years, inflation goes up
Okay.
because the person who's supplying is not reduces prices, but there are more taxes being paid on the net throughout the supply chain. And supply chains are large, then you're going to have more value addition through
So
it.
it takes a couple of
So it
years
takes a
for
couple of
supply
years
chains
for
to
it
adjust to
adjust.
GST.
So net impact in the short run for consumers is going to be bad.
But you're assuring us that
Yes.
whilst in the first 2 years it will be a very painful transition for consumers, net this is a good move for the country.
Exactly.
That's the reason why over 160 countries have adopted GST in such a short period of
it's not-
time.
because-
And this is what India should do.
Exactly, and because if India has got a more stable tax collection, which they because today, even though we have direct and indirect taxes, indirect tax still contributes a major portion of the tax kitty.
Okay.
If you take a developed nation, indirect taxes are lower, direct taxes are higher. But if you take a country like India, indirect tax continues to be
So
higher.
will GST fix that skew?
I don't think so.
It still
Because
won't.
That it will not fix the skew, but it will have more robust indirect taxes being collected, which can then be used to have infrastructure, to build more roads, to do all sorts of developmental issues.
Well, we
which will
hope it's
then-
all used productively.
Yeah.
Okay, we'll do industry-wise because I know it's difficult to
no
gauge, but I know that there's a lot of interest in the audience out there. You have clients from across various industries. You indicated to us through the illustration that you showed us regarding FMCG that if the revenue neutral rate comes in closer to, let's say, 18, 19 or 20%, it's a big benefit for FMCG or consumer
Yes.
good,
So FMCG
goods
is
companies.
very, very good.
Yeah, but if it comes in at 24%, actually if it comes in at 24%, we're
Everybody
all
is
screwed.
screwed.
Okay, fine. So FMCG is going to benefit. What about consumer goods like phones, laptops, TV screens? I mean, our lives depend on these things nowadays.
Correct.
Phones for sure. So,
So consumer
will they
goods-
become more expensive?
Correct. So consumer goods are going to become more, they're going to be less expensive.
Less expensive. Okay.
Because again, 12.5% is the tax which is paid on multiple components.
Okay.
And that also is paid, except on computers, which may be slightly more expensive in the new regime as compared to the earlier, because there are some concessions which are provided for ADPs, which are automatic
Okay.
data processing machines.
Okay, so we've covered the consumer goods industry, so to speak, both durable, non-durable. What about, actually, even autos.
Yeah, auto. is
Yeah, what
very
happens
big.
to autos?
So auto is a very interesting thing because
Should we all buy cars now or wait till GST gets done?
I cannot recommend on that.
Okay, but what is
So-
the impact?
So it all depends on what car you're going to buy.
Okay.
So if you're going to buy a nice, luxurious, big sedan or SUV, it's going to be more expensive
More expensive.
because they are proposing 40% tax as luxury product.
This is the sin tax that
The
has
sin.
been
So
spoken.
because of
It's
sin-
still only a proposal.
Still a proposal, but if,
Yeah.
because that proposal is being taken on the basis of which 18% has been calculated.
Okay.
So if you're going to do away with sin tax, then your 18% keeps going up. So
Okay.
the way by which you are able to manage that 18%.
What about the mid-level car that most of us in
Like
middle
I
class
said,
India enjoy?
Manufacturing sector is going to improve. It's going to be better.
So
Therefore,
cars will become
Cars
cheaper.
will become cheaper.
Is that correct? We are checking with your team to make sure because it's complex, the calculations, and it depends from company to company, state to state.
10% reduction tax is there. Today,
So-
they are paying 24% for the anything more than 1500 cc.
say that again. What happens to auto?
Auto, various motor vehicle have different rates. Two wheelers has 12.5 plus as excise duty and 12.5 as VAT. But in the cars, there are two categories. One category which is less than 2400, 1500 cc and more than 1500 cc. Less than 1500 is 12.5 and 24% as excise duty. So net impact on 1500 is directly 12% reduction.
So the smaller cars will benefit
Yes.
even more, is
Yes,
what you're trying to
even
say.
more.
Okay, superb. So
Even
we've
more.
covered cars, FMCG, consumer durables,
Textiles we've covered.
textiles we've covered. What about industry? What about capital goods, infrastructure, those sectors? What about pharmaceuticals, healthcare, all of that?
So pharmaceutical today has an
sorry, you have
inverted
mic.
duty structure. So which means
Inverted
that,
duty structure.
so APIs, which are this active
Pharmaceutical ingredients.
they come at a higher tax as compared to the final medicine which is being.
They're the inputs into
Therefore, if you
medicines.
take the pharmaceutical industry, they have an inverted duty structure.
Correct.
In the new regime, hopefully they'll fix this.
Okay.
Okay, so the hope is that you'll have taxes fixed on this, and therefore there will be no accumulation of credit. Accumulation of credit also is bad because it's something which is lying on your books which you cannot use, but it's an asset in your books, but really does not work for you.
Okay, okay.
Let's
So
break it
will
back.
medicines get cheaper, Badri? That's the question.
Medicines will get.
Two questions, right? Will pharmaceutical companies make more profit? Will consumers buy cheaper medicines?
So answer is yes,
To both.
yes, because VAT plus if they fix their 12.5% issue
Huh.
into
So
an
GST
18%,
actually uniquely benefits both the company and the consumer in the case of the pharmaceutical industry.
and
Right?
it's even better for the pharmaceutical industry as a company because they're also proposing to give refund of whatever taxes you've accumulated in the past.
Oh, they are. Okay.
So therefore, you
So
get
this
a refund.
will this be uniform across the pharmaceutical industry, or will it depend? Like those that are more inclined towards research and development, will they benefit less? Those that are more no, it's uniform across the board.
What about hospitality? What about hospitality? I think a lot of people who currently, are staying away from home and are, eating out a lot, would be concerned about the restaurant bills and whether or not that's going to be affected. Yeah, it is.
I think from the start, they've only been interested in food. And considering it is lunchtime, I think they are really only looking at that. The answer to that is food will become cheaper.
Okay, that's good.
So
food will become cheaper.
food in a restaurant will
in
become
a restaurant.
cheaper.
Okay.
Food in a restaurant will
Okay.
become cheaper.
Okay.
Food in a pre-packaged form in a
But
shop.
this is a
may
trick
be
answer.
higher.
This is a trick answer because you've been telling us all afternoon that service taxes will go up.
Yes.
So you pay a service tax in a restaurant.
you
Will that
pay
go
that,
away?
no?
Yeah, but will the service tax? No, it will
No.
increase.
So
So
there will
food
be-
in a restaurant will become cheaper, but service in a restaurant will become more expensive. So therefore your bill will stay the same.
Actually, today when you go to a restaurant, you only get a service. You do not buy food. Food is merely a measure of measuring what that service is.
Okay.
So you don't go into a restaurant and don't look at anything which is happening in the restaurant. Just eat your food and then come out, right?
Yeah.
It's the ambience. So the same 10 rupee chai which you get outside, you pay 100 rupees in a restaurant. Obviously not because the chai has become
So
better,
the
but
bills,
because of service.
our bills will go down.
So actually it's only service. By a fiction, the government had made this also to be a sale of goods so that bad fellows can tax it. So now, by removing all these fictions, because there's only one tax, when you go to a restaurant and he charges you money for food or service or whatever is the combination, one tax of 18% will apply to you.
So it will be cheaper.
So it will
Okay.
be cheaper.
So hospitality we've covered. Other industries, infrastructure. I think there are a bunch of questions.
So as of now, we're talking about a cap on airfares, whether or not that happens. Is there likely to be a change in the taxes that are paid on the tickets that we buy for airfare and for other modes of travel?
Certainly airfare will become more expensive.
Okay. So because
So
it's
certainly
because
because
it's a
services-
service and
And therefore there are going to be more taxes that you'll have to pay.
Yeah.
12% becomes 18%. Take it, the service industry as a whole
is going to be
is screwed.
costlier. Yeah.
Okay, so therefore it's going to have more taxes through and through.
Okay.
So if you travel every weekend to meet a girlfriend, you're going to be in trouble.
I can't do that.
Spot on.
Yeah, I know.
Spot on.
I
Very
mean,
well
he's
spotted.
asked two things.
Food
He's asked me food
Yeah.
and ticket.
Yeah, but I'm
There are
sure
more important
I'm
things
sure
like
that
health, hospital. They're not worried about that.
hey, I'm sure most people my age would be asking the same question.
I'm not sure about that. Okay. But
Okay,
anyway,
other industries, infrastructure.
infrastructure is actually very interesting because the today again infrastructure is one area where you have works contract tax both from the services side as also from the VAT side. So they expect that these things will get better because there will only be one tax, just like food. Wherever you had multiple taxes, for example leasing, whenever you lease laptop instead of buying it, you have to pay in some cases both VAT and service tax.
Okay.
Because it's deemed to be a supply of goods. In all those fictional cases, works contract originally in 958 was considered to be a service only. But then the lawmaker kind of changed it and made it more complicated.
Now even I'm thinking of food, Badri. You started talking works contracts.
I know.
Yeah. Just tell me if infrastructure stocks will benefit or not.
So infrastructure stocks will benefit.
They will.
Yes.
Capital goods stocks? Companies that make capital goods.
So really it will not impact because it will be an input for all other businesses. So it will become really neutral. So it will have no real.
It could benefit by the lower.
But why? If he's going to pay output taxes, then it will be a full credit to him.
Any industries we've left out? E-commerce industries. Oh, there goes his face. E-commerce?
I don't know.
What?
I
I don't
don't
know.
know.
Why is that?
The reason is because e-commerce is a very complex industry, and I always fear whenever you have a full chapter for an industry in an act,
Huh.
that industry is going to really get butchered.
So this is in the full chapter in the model GST
Model
law.
GST
right?
law on e-commerce, which means that every lawmaker is looking at this industry only,
Huh.
which means that somewhere he is going to be in trouble because there is a TCS on it. There will be a higher rate of
TCS
tax-
is
tax collection at source.
okay.
Okay, so he'll have to monitor his 2 lakh suppliers, sellers, and consumers who want to buy from it. He'll have to ensure that he complies in each of the individual states differently. He'll have warehouse in different places. Very complex.
Oh, let me ask it from the consumer point of view. All the apps we download, the music we buy online, the goods we buy online, are online purchases of whether it's a food article or a gaming product or something like that, are they going to become more expensive?
So again, so for example, very good question, and it's an area which has been very, very complex, okay, in the current regime, because software is one thing you don't know what it is.
Right, it's intangible
Software,
in that
it is
sense. Right?
intangible, very tangible. If it's packaged commodity, it has got certain rules. If it's a customized product, it's got certain rules. If it's a combination of these two, it's got certain rules. It's got certain implications from customs. It's got certain implications from service tax. So take a very simple example. I download a game.
Pokemon Go.
That's a very dangerous game. But anyway.
You've been playing it?
No, I've not been playing it.
Okay.
I've just been told it's dangerous and stay away from it.
Okay.
And I've been reading stories about it.
Huh.
So take Pokemon Go.
Yeah.
Okay, and they should not leave the room because of that. But Pokemon Go, they buy online. Okay, so they buy from outside India into India. Okay. So on that supply, it will be an import of service
Correct.
because there are no real goods coming in.
Right.
And the definition of goods under the model GST law excludes intangible goods.
Okay.
Okay. So you download the
Which is an import of a service.
import of service. If it's from outside India directly into India, import of services, you have been given an exemption if you buy in a year less than 10,000 rupees worth of these games and services.
Okay.
So if it is more than that, then you have to pay taxes on that.
And how much?
18%.
Oh.
18%
So
is
anything
what
less than 10,000, you're safe. Anything more, you end up
what is
paying.
some threshold will be provided.
Okay, fine.
No,
So
not
10,000 is just an indicative
Just
amount of
indicative.
right. Okay,
So
fine.
if you go below that, then you are
So
safe.
currently we're not paying any taxes if we were to download a game.
No, you're not paying
But
it.
taxes
Because there is
will get
there is a
levied.
specific exemption
Yeah,
for that.
so taxes will get levied when GST comes in, which means that if you
Maybe
exceed the
depends.
threshold.
If you exceed the threshold, yes.
Okay,
yes.
what about purchase of music, etc.? Is this the same thing that across
Same thing. All of
board?
these will become under the same category of intangible goods coming in.
Okay.
Again, I'm saying it's a little different if, for example, the goods were downloaded by, let's say, Pokemon Go India or Nintendo India,
And then resold
and
here.
then
in-
made into a CD and then sold to you. There, the disputes are going to continue.
Okay.
Because still it is unclear whether the definition of goods and services is going to treat this as intangible and put it as service, or tangible because the service has now got ingrained in a media. The media is being bought and sold.
Okay.
So there is some confusion with respect to that, but that's one of the few areas where there is still likely to be debate and amendments.
Okay, we should wrap up in the next minute or two so that you get a respite. Any other industries or any other quick questions? Okay, I'm passing the mic back to Nandu.
We'll come back. You hold that.
My question is actually, my question is actually got to do with implementation. Now, let's assume that the bill gets passed. How much chaos are we in for?
The constitutional amendment.
Yeah. No, as in implementing it from a point of view of a company, from a trader, from a consumer. Is it like, let's say, 1st of April next year? Is it doable? Do companies have to prepare? Consumers doesn't make any change?
So answer to that is you'll have no choice. If the government says 1st of April, you'll have to make do with it. Okay. Well, whether the companies will be ready with it, whether it is too short a time, you only know. I believe all the manufacturing sector companies have already been preparing for this change for a few years now. Okay. And the expectation is that the IT companies will really come out and be able to help them transition this in the current regime. And we have enough people who are going to be able to advise them on how to transition. But yes, it's a short time. To give you an example, Australia probably gave about 2 years for the transition to happen. Okay, we may give 3 months. Okay, so but that's
3
how
months is a lot of time in India when it comes to taxes.
exactly
Yeah.
3 months to give you time
For
to
any
this
law,
thing.
I think the company's law, the rules came in overnight.
Yeah, I
So
think
you had
overnight.
8 hours.
Yeah, so
Right?
3 months is a lot of time
8
now.
hours, literally 8 hours, and that also in the dead of the night.
Dead
so
of the
I
night,
think
no?
3 months we should be grateful for.
Very grateful.
Very grateful.
And that's the reason why they've released the model law today itself. By releasing it today itself, what happens is that you have time to prepare
understand
from
it.
now till then. I expect the states will ratify by say October or so this amendment bill,
Okay.
and by the time the model law will be ready. So by November, December, they will have a fairly fleshed out model law which will be debated across the states. And by 1st Jan, you probably have something in place coming in. But the key problem is going to be synchronization. So even if a single state is not ready by 1st of April, they are not able to go live because the entire system is going to be meshed together. So if a northeast state is not able to manage, or there is some state, let's say Bihar is not on board IT wise, then you are going to have a situation where you are going to immediately have a problem of synchronization. Barring that, I think April is a reasonable time. October probably is a more relaxed and more stable time. You may also have a period of about a year when you have to comply with both the laws. So that also may be there. So there are going to be some different models which will come to know over the next few months as to how it is going to be implemented.
Yeah. So we discussed that the bills in the restaurants, food in the restaurants will become cheaper, and so will be the non-luxury cars. But we also discussed that in the initial period, the inflation will go up. So there will be an inflation. The prices, they won't change the prices. So isn't that also a cause of worry? And will we have a mechanism or a system to support that?
So the very good question. So the inflationary effect of the GST is going to be directly depend on the rate that they are going to apply. So if the rate is going to be at 18%, the impact of inflation is going to be minimal. But if the rate is much more, say 25%, then the impact is much more. So therefore rate becomes extremely crucial for you to be able to manage the inflationary process.
The RBI is also going to be watching.
So they're going to be looking at it very, very closely, and therefore rate is going to be something which is going to be the key component of how to manage inflation.
Okay, one more question coming in from Harish Mathur 84, the impact on insurance products. Badri, if you can expand that to include all banking and financial services and then insurance as well.
So insurance again is a very, very complex sector as compared, just like banking and finance.
Okay.
That answer is that you're going to have a higher tax on insurance products.
Okay.
Therefore, net impact on banking and insurance is going to be higher. If you see the Rajya Sabha Select Committee report, they are saying that any rate which is higher than 14% on the banking and financial services is going to have a net increase in the cost of services to the country at large. Okay, so any rate above 14%, you're already above it. Okay, so the sense is that banking and financial services is going to become more expensive under the new regime.
Okay.
And there is also
that includes insurance products,
that
right?
includes insurance products.
Okay.
Also, the problem is going to be that there is going to be higher working capital requirement under GST.
Okay.
Because of the way the law is going to be there, you'll have to pay 18% upfront, even if you're going to do a stock transfer, and there are certain rules they're going to do that. And therefore, the working capital requirement, just having to pay those taxes and then be able to manage is going to be higher. And therefore, there will be much more impact on the banking industry coming to the fore.
Will this impact the large banks, the insurance companies? Will it impact the agents, resellers in between? Will it impact the consumers? Can you just very quickly give us an answer?
Let's take a normal supply chain for an insurance company. You have the insurance agent, the insurance company, then you have the policy holder.
Correct.
Okay, take it. Insurance agent to insurance company is going to be totally neutral.
Okay.
They're not really going to be impacted because they'll charge 18%, which will be taken on bond by the insurance company. The insurance company, when they're going to issue policy to the consumer, today they issue at 14%, 15%. And also, actually the insurance company pay higher taxes than 14% or 15% because worldwide, insurance companies pay taxes on premium minus payout. Because that's the amount that they actually collect. So you collect premium from 100 people, 40 people have asked for money back. Therefore, really what you made is 60 rupees from that. Therefore, you should really tax only 60. But the way our system is structured, you collect on 100 but give no discount for 60. Therefore, you're effectively already paying higher amount of service tax on insurance product. But if it goes from 15% to 18%, an amount is only going to increase.
Okay.
So therefore, net impact on insurance company to consumer is going to be higher taxes.
For the consumer.
For the consumer.
Okay, fine. I think we've come to the end of our time, Badri. We've taken more time than we had asked you for, so thank you very much for that. For those of you who've just tuned in, unfortunately, we're at the last minute of our broadcast, both on Facebook and on Periscope. And for the last over an hour and a half now, we've been discussing GST, how to understand what GST is, what its implementation in India will mean, how it will replace the plethora of indirect taxes that we have today, and really what kind of industries it will impact. And Badri is very kindly also broken up, industry into manufacturers, traders, and consumers for us. So what we're going to do in this last 60 seconds is literally only going to wrap up through a rapid fire, only sort of monosyllabic answers, Badri. Will GST be good or bad for India?
Good for India.
Will taxes that consumers pay go up or down?
It will go up in the short term, come down in the long term.
Will taxes that business pays go up or down?
It will not matter.
Okay. Which industries will benefit more from GST than others? And you can use more than one word here.
So FMCG,
Okay.
auto, manufacturing industries in whole where there are no concessions are all going to benefit. Industries which are services are not going to benefit. Exempted industries are going to face a challenge of not knowing what to ask.
Okay. What should be, according to you and the calculations your team has done, the ideal revenue neutral rate? Should it be 18% as Arvind Subramaniam has recommended, or 24.7% as the State Finance Ministers panel has recommended?
Anywhere between 19 to 21% is what we believe will be ideal.
19 to 21%.
But 18% I believe will not be sustainable.
Okay. How many years will it take for us to get over the logistical implementation pain of GST?
About 2 years.
2 years. For 2 years, will it be absolute chaos for big business and small business? Because it's, most of our comments and questions have come in from small business owners, entrepreneurs, kirana walas. They're really worried. They're saying the big companies have the money to employ all the sophisticated tax lawyers and consultants and figure this out. But what are we going to do? So what happens to small business? What happens to entrepreneurs, kirana stores? How will they be impacted?
So according to me, big businesses will be impacted more than small businesses, because apart from just getting over this GST thing, they'll have to redo their entire supply chain.
Okay.
For the small business, the big problem is going to be of getting their accounts right and being in compliance, because I believe our small store walas, kirana walas, who do more than 10 lakhs, I think a lot of them do that in India, don't necessarily keep their accounts properly. So it's going to be a pain for them to be able to get over that initial hump, and probably going to be more painful. It will also depend on how well the IT network in India operates. So if it's going to be simple to upload, it's going to be simple, a person who need not know sophisticated amount of taxes.
But so far the model bill doesn't seem to suggest that it's going to be simple, right?
So model bill does not suggest, but according to me, model bill, you should understand that only 1% of their entire model GST bill is going to apply to 90% of people. The remaining GST bill is really for more sophisticated players.
Okay.
So where somebody buys goods and sell goods, it doesn't
It's
matter.
fairly
They just
simple
need
for them.
two sections to know.
Okay.
But for him, the bigger problem is going to be IT.
Okay.
Be able to upload the data on time, be able to issue an invoice on time, and be able to pay taxes on time is going to be a bigger issue.
Okay, fair enough. Will the application or the implementation of GST boost GDP?
Yes.
It will.
Yes.
Okay, I think I've exceeded 9 or 10. I'm not sure. I lost count. But here's the final one. What do you want for lunch?
Nothing.
Nothing. All right. Badri, thank you so much. For those who were watching, you ought to know that Badri's been doing this for a very, very long time. And by the way, Lakshmi Kumar and Sridharan is also working, I think, with the firms, the IT firms that are setting up the GST network. This is the IT backbone of GST. And if this one doesn't work, then all of GST will collapse. So they're working to consult with them. It's Infosys, isn't it? That's setting up the GSTN, as it's called, GSTN. So it's been an interesting many months for Badri and his team. And thank you for sharing all that information and knowledge with us, Badri. Thank you for watching us on Periscope, Facebook, however you tuned in. That's it from the BloombergQuint team here. Thanks very much and have a great weekend.